Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, February 21st, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is, will NVIDIA earnings provide investors a buy the dip opportunity for reflation? So the nuance there is NVIDIA earnings today are about as big of a micro turned macro catalyst as I've seen in my career. After more than tripling last year, the stock is responsible for a third of the S&P 500's year-to-date gain of 3%. Elsewhere, the Fed and ECB minutes today will offer investors clues as to whether some turbulence in the respective immaculate disinflation processes risks merely delaying rate cuts or putting rate hikes back on the table. Lastly, the China Securities Regulatory Commission banned net sales of stocks by institutions in the first and last 30 minutes of trading. In terms of market implications, investors that missed or came late to our Goldilocks trade should root for poor reaction to whatever quality of results are reported by NVIDIA, because that will give them an opportunity to improve their positioning for the new reflation market regime. We saw a similar repositioning dynamic occur during a correction in the late summer, early fall of 2020. Refer to yesterday's leadoff morning note for more details. Lastly, the bottom in Chinese stocks may be in for now, and if so, it would send a powerful signal to investors that are looking for the new reflation market regime to transfer positive relative returns to international and emerging market equities. Transitioning to my 42 macro dashboard here this morning, our 42 macro dashboard here this morning. Obviously, Team 42 loves this thing as much as I do. No real overbought or oversold signals today from our fans at Longbow in terms of the trading ranges. So we'll wrap up with a question from our community, which is asking to explain more detail across asset correction risk indicators. So notwithstanding, we've already explained, obviously, all of our technical tools that we use, quantitative risk management tools that we use, and all the educational resources that we provide here in the dashboard in terms of the product walkthroughs, the glossary, and most importantly, the macro class, which I highly recommend all of you to participate in. But just kind of quickly wrapping up with CACRI. So CACRI is the combined shares of what we call inflation and deflation in terms of a market regime perspective. So I recall that we use our global macro risk matrix to now cast the top-down market regime, which is what you basically should be doing as an investor from a factor tilt perspective. And so the combined shares of inflation or deflation in that grid regime process correspond to the two risk off regimes. So if the combined shares of the two risk off regimes are really low as they are currently, it's suggesting that asset markets broadly do not agree that there's a decent amount of market risk, which is much like when volatility is low or credit spreads are really tight. It's obviously can be a warning sign for investors, particularly when it rises from a particularly low state. So what we've identified in this chart are levels that have historically coincided with deeper corrections in asset markets, i.e. CACRI rising above the 40th percentile threshold versus CACRI falling below the 60th percentile threshold as an indication of a recovery on asset markets. So you think of CACRI based on the 42 different volatility adjusted momentum signals in our global macro risk matrix. The amalgamation of that is sort of like a cross asset VIX. And when the cross asset VIX is low, obviously it's signaling that currently there are good times in markets, but they may not last, particularly when CACRI starts to rise above that consensus complacency threshold. That's not the case today. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, February 21st, 2024. I'll be on Real Vision with our friends over at Real Vision on the Real Vision Daily Briefing this afternoon at 4 p.m. Eastern with our friends over at Real Vision to unpack all the different puts and takes of what's going on with the reflation, etc. So definitely check us out there, and we'll catch you back here tomorrow. Cheers.